So give us a gauge of what is happening with the consumer. They should be happy given where wages are and inflation coming down, and they're still spending. But there is this strange dichotomy going on.
It's such a funny word, right? This word happy. I don't know what to make of it. But yeah, if you look at consumer spending, you got to say they feel pretty good, or they should feel pretty good. Um, there's very little evidence, actually, economic evidence, that consumer sentiment directly feeds into those near-term spending patterns. It's really driven by income. Income is up. Job prospects, even though the unemployment rate has gone up a little bit, I think the general perception is that there is still a high demand for labor. And so people are sort of saying, why not? And so they're spending. I'll make a case that this month, November, well, these 2 months, November and December, this holiday sales is going to be the most surprising thing in the whole last 3 years of surprises. Because I think almost everybody thought that at this point, consumer spending would be slowing down, the growth would be slowing down, and that this might be a difficult holiday season for retailers. And I think they sort of planned accordingly. It's going to be interesting to see what goes on with their inventories. But spending is up. In November, consumer spending did what consumer spending has done in the past, favored goods instead of services, and it led by, guess what, video equipment and cars. And so this is very traditional, and I think it's very surprising to a lot of people.
And Jeanette, yes, indeed. It's been a kind of a lot of surprise when you think about both the economic picture this year. I mean, we kept talking about the R word throughout this year. That never materialized, right? And you think about the strength of the consumer as well. There were all these worries about the next shoe to drop, the worry that when student loan repayments would come back, and that was the next shoe to drop. But it's come back, and we haven't seen that really hit consumers like we thought it would. But what is the check engine light that you're looking for when it comes to how the consumer is doing in 2024?
Well, the check engine light, I think, definitely is, sort of consumer credit card balances, which have been trending up. The information we get from the big banks in particular about what they're seeing in their, checking accounts, which they've continued to signal they've seen those draw down from these unusual highs that they saw during COVID. So I think that's an issue. And then the unemployment rate. Again, we none of us expect the unemployment rate to go up substantially in the first quarter of 2024. But you can be surprised about that number. So I think if the unemployment rate turns around and starts deteriorating significantly, that'll be a big check engine light, if you will.